Yesterday, oil jumped to $105 per barrel amid reports on a failed coup attempt in Iraq. Against this background, tensions have risen sharply in the region. Obviously, this religious conflict will hardly subside quickly. There are fears that this situation will lead to reduced oil production, at least in Iraq itself. Moreover, this is happening against the backdrop of talks between the West and Iran, and those who try to seize power in Iraq are associated precisely with the Islamic Republic. This means that the negotiations may be derailed or delayed. In the face of a growing energy crisis, this could result in severe energy shortages. The price of oil is expected to continue edging higher under such geopolitical conditions. However, markets also take into account other fundamental factors, such as the central bank's interest rate hikes in an effort to curb inflation and the subsequent global economic downturn and recession, which in turn reduces energy demand. In the meantime, Brent crude oil futures broke above the resistance level of $102 per barrel, and now the benchmark has a chance of extending gains and heading for the area of $105 and $107. Alternatively, Brent crude may go down if the price returns below the $100 mark. Now let's take a look at the gold price chart. Oddly enough, the news that the European Central Bank could speed up the pace of the interest rate tightening led to higher gold prices. This is due to a weaker dollar, which reacted to these reports negatively. This is yet another proof that the inverse relationship between the dollar and the gold prices is in effect. To be more precise, almost all assets gain value when the dollar becomes cheaper and vice versa. However, the outlook for gold is rather grim. If the European regulator joins the ranks of central banks, rushing out the biggest interest rate hikes, speculative demand will decline sharply, and this in turn will exert downward pressure on the yellow metal. Thus, gold may soon fall below $1,700 per troy ounce. The volume of short positions will increase further after the price fixes below 1,720, at least on the forward chart. The Russian currency is confidently trading above 60 rubles per dollar, even trying to rise above the 61 mark. Market participants expect the Ministry of Finance of Russian Federation to resume foreign exchange interventions as early as September. However, this is still no official confirmation of this fact. If nothing changes within the next few days, the ruble is likely to start gaining later in the week. Yesterday, oil jumped to $105 per barrel amid reports on a failed coup attempt in Iraq. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.